Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, the SPY and most of the market was indeed, as a matter of fact, down after the non-farm payrolls report came out this morning, which showed that once again, job creation in the United States is a little bit soft. Now, there was a silver lining. We did get some rotation into big tech. And if you paid attention to yesterday's video, that's what we were watching for. Several sectors were in desperate need of a pullback. Financials pulling off the top, needing a bit of a pullback. Healthcare has been running hot, and we wouldn't be surprised if there was a pullback. And even some of our sectors benefiting from rotation recently, such as consumer staples into resistance, bit of a rotation down, and consumer retail, bit of a rotation down as well. But we were saying in yesterday's video, if they were to have their own rotations to the downside as part of healthy pullbacks in some newly established uptrends, there is one sector that needed to be there, which was your silver lining of the day. And that, of course, was big tech. Now, the gains weren't fantastic nor magnificent. However, they were enough to keep the S&P just flat enough on the day that we didn't completely erode all the price action over the course of the morning from the non-farm payrolls reports. So in today's video, guys, we got a whole bunch of stuff to cover. Number one, we'll take you through the non-farm payrolls jobs reports, see what happened there. And we're also going to cover many other news pieces that came out today. Number two, we're going to go through our technical analysis portion of the charts, take a look at the SPY, the QEQs, and get a sense of the rotation, where it stands, and are the markets healthy leading into the end of the month of December. Thereafter, we will do the same thing across our big tech names, which had a little bit of a bump today. Not too much, just a little one, and derive whether or not some of these names are still in nice trade locations or nice locations for long-term portfolio positions. And towards the end of the video, of course, as usual, we will go through our biggest gainers and losers of the day, of which, as usual, there were many names to the downside, some recurring names to the downside, and to the upside, we had a few big performers here that we can talk about as well. And that's going to be it for today's video, guys. So a lot to cover. Let's jump right into it. So the SPY down about 0.27, the Qs up 0.20, and take a look at the heat map. Now, it wasn't the prettiest. However, when the rest of the market consolidating, you might remember over the past week and a half, it's just been the bottom half of the market, right? Green, and big tech constantly selling off, especially since those Broadcom and Oracle earnings. Today, when the rest of the market needed a bit of consolidation, we were looking to understand and see if big tech would have been there to kind of hold up the markets as best as they could. And indeed they were, led by Tesla, which established a new all-time high today off of the renewed bullishness surrounding the full self-driving robo-taxis, now without security drivers or safety passengers, rather, next to the driver's seat. And the rest of big tech, not too bad. Google's still pulling back, but Google really carried the market throughout the month of November, so they need a bit of a pullback, but some nice rebounds here in a few key names that we were really paying attention to that have been suffering over the past week and a half, so not too bad. It was a red day, but this was your silver lining. Moving into the one-day relative, you can see that even better. Technology, consumer cyclicals, and communication services, small green, the whole rest of the market amidst a pullback. And on your 1 week relative, well, this kind of shows where we've been going in the past week, right? Big rotations into the rest of the market, materials, healthcare, financials, cyclicals, industrials, and defensives. A whole bunch of non-sexy sectors, right? Since a lot of us are exposed to the big tech names, well, the market's been rotating into almost everything else. And we've been commenting on this for the past 2 weeks, so you would have been early if you tried to clip into some of this rotation trade. To the downside over the 1 week relative basis, still technology, energy, and communication services overall. Where we stand in the markets right now, well, we are pretty much neutral in terms of the fear and greed index, which measures various different momentum indicators. The market momentum still in a fear category, stock price strength, net new 52-week highs and lows. Still fearful, but getting incrementally better as we kind of attract more rotation into the market right now. And the stock price breadth, it has been improving since the November lows, but still in a bit of a fearful environment. Now, what is actually bullish? Well, the put and call ratio, right? Not too many people buying insurance on the market right now. And also the VIX. The VIX, not quite in a fearful environment right now. So as a result, you pretty much just stand in a neutral territory right now. Now, before we get into more technicals, guys, let us dive into what exactly happened with the jobs reports, because we knew this would be the biggest volatility event throughout the entire week. So let's have a look at some of the numbers here at a first glance. We got the double non-farm payrolls, right? So the ones for October, minus 105K versus 108K to the negative. Now, this was slightly better than expected, but this had to do with some quarterly revisions that were largely in responsible from Doge, the Doge cost-cutting endeavors made by the federal government very early on in this year. There was a quarterly revision, and the government jobs in this one represented a lot of the cuts in this one. But this one was kind of the non-factor. People were more curious to see what would happen with one from November. And the one from November came out 64,000 jobs added instead of the 50K expected. So it was a bit of a mixed report on the jobs front. We'll kind of break it down in just a few moments here. But other notable things that happened today, retail sales. Look at this retail sales number. Not very recessionary at all, right? 0.8% versus the 0.3% expected. And a lot of our travel names and other consumer retail names really did well. And we've been noticing that a lot of these travel names, whether it's the airlines or the travel operators such as Expedia or Booking.com or even Airbnb, had been moving up significantly over the course of the past 2 weeks. And today was no different. Continued rotation into some of those names. And additionally, guys, down to the bottom end here, or rather, let's cover the average hourly earnings, 3.7% versus 3.8%. This was not too bad. You always want to make sure that this rate is above the overall rate of inflation. And you guys know I use the overall trueflation gauge as my rate of inflation because it represents about 15 million different products measured and reset on a daily basis. So it provides a much better insight into an average basket of consumer goods and services than maybe the CPI or the PCE as it stands right now, about 2.58%. So as long as your average hourly earnings are above the rate of inflation, you can say that people are regaining purchasing power, although slowly. At least it's not inversed, right? At least this average hourly earnings ratio is not under the rate of inflation. That would not be good overall. Now, we had some declines here on manufacturing PMI and services PMI as well, which still show that certain aspects of the economy, especially manufacturing, right, are still struggling. But that's what the President Trump's administration is working on, reshoring manufacturing, kind of rekindling that entire industry. No secret here, guys. Manufacturing has been very weak for the past 2.5 years. So this is nothing new. But there you have it. We got through the big day. And without that much damage, to be quite frank with you, I was probably expecting a bit more, especially if the November payrolls would have come in lower than the expectation. We probably would have had a much more red day than we had today. And big tech probably still would have continued on to the downside. Moving on into the article right here. So payrolls rising by 64K in November after falling 105K in October. And those, of course, were the delayed jobs numbers. Taking a look at the monthly job creation, you will see it's been getting softer and softer and softer. But of course, there's a few factors at play here. Number one were the efficiency gains from AI, which led to some layoffs by Amazon and other big tech companies over the course of this year. Number two, obviously, had to be the execution problems that a few companies have been facing in the past few years. Companies like UPS, companies like Verizon, other companies of that nature have been cutting jobs left, right, and center after new management has stepped in and said, you know what? Maybe we don't need all these positions that we hired in 2022, and we want to run a leaner ship. Not because the economy is struggling, no, because a lot of those companies had their own individual execution problems. And reason number three is in relation to your immigration, right? So a lot of deportations, of course, and obviously not that much in terms of hiring for seasonal jobs or all of the people, unfortunately, who got deported. Those people are also adding to the softness here in terms of basically just not needing those jobs anymore, replacing those jobs with, American paying jobs, which obviously, if you're paying people under the table and then you actually have to pay them a taxable wage, well, you can probably only hire one person for the previous 1.52 workers that were hired previously. All of these things together, adding to the list of many things affecting the jobs market currently. But it's not, at least if we trust the Federal Reserve and a lot of other analysts, it's not something that is systemic, meaning it's not because the economy is getting extremely, extremely weak that companies are laying off employees by the hundreds of thousands or by the millions. No, rather, it's just because of those issues that we listed previously. Now, your unemployment rate also uptick a bit higher, but if you look deeper into the data, this is because of the participation rate increasing, meaning that a lot of discouraged workers or people that had left the workforce altogether after the COVID era pandemic, about 2020 through end of 2023, have now slowly but surely been rejoining the workforce. Now, the recent uptick as well is because the Trump administration has cut a lot of benefits, right? And a lot of people have been rejoining the workforce as a result. So, if you look further into the data, you also understand that this unemployment rate uptick here is not a result of jobs really, really falling off a cliff and companies firing people by the millions, which are not able to find new employment. We have the JOLTS jobs openings report. There's still 7.5 million jobs available across different aspects of the economy right now. No, these are just more people joining the workforce that haven't yet found work, which arguably is a good thing, right? Now, you never like to see a higher headline number, but you have to understand the data, right? Just looking at numbers without context doesn't really mean anything. And here's a bit of a summary from that. The jobs climate continues to be one of low hiring and low firing, affected as well by stringent border practices that have drained the workforce of the usual influx of immigrants. The establishment numbers showed that most of the gains in November came from a familiar source, healthcare adding 46,000 jobs, accounting for more than 70% of the total net increase, due, once again, to the aging population. Construction rose by 28,000 jobs, while social assistance contributed 18,000 jobs. On the downside, transportation and warehousing was off 18,000, part of a continued trend in losses for the sector. This is a net result of tariffs, obviously importing far less goods. You might remember I showed you a chart of the trade balance just a few days ago, which showed that, well, the trade imbalance, the trade deficit is shifting a lot to the downside, right? So we knew that when the tariffs were put in place, you remember hearing from the port of LA and the port of Miami and other different ports, how they were importing just a whole bunch less things, right? So as a result, the transportation sector has been getting hit from that progressively since the month of April, and leisure and hospitality also posted a loss of 12,000 jobs. Once again, in relation to tariffs, we know that travel to the United States has been soft since the month of April. We covered that a lot on the channel leading into the summer months, as people have somewhat boycotted travel to the United States in favor of other countries and other destinations. Now, this has been progressively getting better if we just look at Booking.com's and Airbnb's most recent earnings, which we also covered on the channel. But suffice to say that there are indeed less travelers coming to the United States over the course of 2025. And as a result, you have had some layoffs in leisure and hospitality to accommodate them. So you see, the numbers without context don't mean anything. So hopefully me providing a bit of context behind these numbers helps you understand a little bit more why we're getting these numbers, and even in a sector by sector breakdown. Now, there's a few other notable things that happened today, guys. Number one is this one right here. There's a bill being passed currently right now, which kind of came into play today and is already making its way quickly through the administration. Bill to ease big tech project permits advances in-house. They call it the SPEED Act. So big tech companies such as OpenAI, Meta, and Microsoft want Congress to pass legislation to reform the process for obtaining federal permits for projects to build out AI infrastructure and boost semiconductor production in the US. They want to be able to build things faster. There's too much red tape preventing them from doing so, whether it's building the data centers themselves or building the energy installations that will funnel the power to the data centers, of course. Backers of the bill, the SPEED Act, argue it is key to helping the US beat out China and other global competitors for leadership in AI. The bill cleared a crucial procedural vote, 215 to 209 on Tuesday in the House, and a final vote by the House on the bill could take place later this week. Here's a very cool infographic of the good old SPEED Act, unclogging the bottleneck for AI's power grid, so not only allowing them to build the actual data centers faster, but also for the installations, because we know we need a whole bunch of power. There's not enough power, guys, and the bottleneck could come as soon as 2027. So this is a bill being passed to kind of accelerate the processes to build more energy infrastructure overall, whether that's big grid and power infrastructure builders or power generators and specialized buyers as well, names like CEG, and for names like CIFR and IRN, which are highlighted on this one right here. And for the grid and power infrastructure builders, you got contractors such as PWR, grid equipment suppliers such as ETN, and one of the ones that we've been talking about recently, right? Power and cooling systems companies such as VRT could be some of the beneficiaries from there. So there you go. Here's your cool little infographic. I thought that should be very noteworthy to bring up, because that's definitely going to help with the AI trade overall. Now, moving a little bit further here, we had Sung Cho, one of my favorite people that present commentary on CNBC, come out today and address some of the concerns surrounding the AI trade recently. A lot of the concerns around the debt, a lot of the concerns around the depreciation, right? The credit default swaps, right? The price of insuring the debt for Oracle and other companies like CoreWeave has been skyrocketing, which has left a bad taste in a lot of people's mouths and has been one of the focal points of concern for the whole tech landscape. So he is the lead technology analyst and lead of the technology investment team at Goldman Sachs. So whenever he says something, I always enjoy listening to his takes. Let's have a listen to what he has to say about the recent concerns here. Basically saying that, well, the next wave of AI CapEx will be funded overwhelmingly by operating cash flows. And you might remember, we were literally saying this for the past week and so when we were explaining why there was a bit of AI exhaustion, right? There was a huge build out here, a lot of it funded by either debt or capital raises. Big tech obviously funded it with cash and free cash flow, but other companies funding it with debt. Why? Well, because their contractual obligations only really come into play 2026, late 2026 into 2027. And right now, you remember me talking about this, you got the little vacuum, the catalyst vacuum, where everybody gets super worried between the moment in time where we commit a bunch of capital and the moment in time where the data centers are actually built, operational, and generating operating cash flows, right? So let's listen to what he has to say on the same subject. It'll only take about a minute, so bear with me.
So I feel like this market is focused on debt, depreciation, and doubts.
That's a really good way to put it.
How do we get out of that? I mean, is that just how it's going to be for a little bit?
I think it's really important to think about where the funding is currently for the next couple of years. So if you think about the aggregate level of spend that we need probably over the next couple of years, we think it's about $700 billion to $1 trillion. And what should calm fears is that 90% of that is being funded by operating cash flows. Mm-hmm. It's really only 10% that's being funded by debt. And do you know that majority of that debt is actually going to be issued by Meta, which actually has a rating that's better than the US government, and the bonds are trading inside of US treasuries. So we're talking about CoreWeave, we're talking about Oracle, we're talking about 2 or 3% of the debt market of the entire funding picture. And so the vast majority is that the funding shape is actually in really, really good shape. It's just we're talking a little bit about the tails where there's a little bit of concern right now.
So you think that those two specifically are sort of drowning out the story that the others are trying to tell?
I don't think funding is going to be an issue going into 2026. And if you think about CoreWeave and Oracle, I think what you have to realize is that they're not facing a demand issue. There's a little bit of supply chain backup issues that they're dealing with. Mm-hmm. And so that's leading to a little bit of concern. And then there's also a little bit of this OpenAI with Google Gemini being the leading model now.
A little bit?
So OpenAI,
So I'll cut it there, but a very interesting segment. It actually goes on much longer than this if you guys wanted to look at it, but essentially kind of saying the same things that we've been saying on the channel as well in terms of these, right, this little gray zone area. But however, we will be making a bunch of money from the data centers come late 2026 overall, and that most of that will indeed be funded by operating cash flows at the time. But the initial stages right here will be funded by a little bit of debt, of course. And that is true for a lot of the other players, such as Iris Energy, such as NBIS, such as CoreWeave. But even Oracle came out and specified the other day that they build their data centers currently to order, right? They wait to get the cash before they actually build the data centers. A lot of people thought they would be employing a tremendous amount of debt, but the debt is currently still accounted for right now. So are the market fears a little bit overblown, a little bit overplayed right now? I do think so myself, and I'm a big fan of investing for this, right? And we have to get through the noise. If your thesis is investing for this, late 2026, 27, 28, well, you're going to have to be able to get through all of this noise. And that's what we have been saying all throughout the week so far. So that was an interesting take. Moving on a little bit further here, software stocks are now underperforming semiconductors by the largest margin in more than 23 years. Look at this. This is your North American Tech Software iShares ETF. Divided by SMH, which is the semiconductors ETF we look at all the time. Not since 2003 have we been this low. So talking about all the companies like Adobe, Salesforce, ServiceNow, so many software companies have been absolutely abysmal over the course of this year so far, but could possibly be some nice opportunities into 2026. As we broaden out, cybersecurity is probably my favorite look, but those companies have done well over the course of this year. I'm still not really playing some of the legacy players like Adobe and Salesforce with large amounts of capital, but we'll be on the watch for the software rotation into 2026 because there might be some lopsided risk to reward here. Moving on, according to Goldman Sachs, after 4 years of AI adoption, so moving into 2027, right, from the start of last year essentially, AMD, Broadcom, and Marvell together are competing for only about 20% of the market NVIDIA will still dominate with roughly 80% of the share. And this is your landscape through the fourth quarter of 2027. Look, NVIDIA will be losing market share, but a ton of market share? No, AMD is going to get a little bit of it, which has been our thesis all along. Broadcom getting a little bit more of it, but still not that much. These are projections from Goldman Sachs. And Marvell, your last one, well, you can barely even see them. They're the tiny little blue line at the top of the screen right there, right? Which is why I still think that, AMD and NVIDIA represent some very good bets. AMD arguably has the best growth of the pack into the next 3 years, just on a multiples basis, which is why I'm currently bidding on NVIDIA and AMD. But shout out to Marvell and Broadcom. Could be very interesting plays into the next few years as well. Moving on further, here are the planned data centers in the United States. I figure this should be noteworthy in case you guys were looking to invest in energy corporations. What you'll be wanting to do, I've done a bit of this with you guys, but if you want to do this, right, you know that most of the data centers right now are around the Permian Basin in Texas and also around Virginia, right? So if you were looking to invest in any power players, well, you're probably going to pull out your favorite AI large language model, whether that's ChatGPT, Gemini, or Grok, or whatever you guys use, and ask it, what are the companies that provide the local power for these installations? And obviously those will be the biggest beneficiaries of AI, or rather of pricing power in relation to these AI data centers, as a lot of these contracts are established on a private kilowatt hour basis and do not use the public rates. So keep that in mind, but just so you guys know kind of where to look. Moving on a bit further here, we got some stats from Bank of America. Fund survey managers, right? So here you go. Fund survey managers, 3.3% in cash, the lowest that we've seen in a very long time, guys, 25 years. So this is very tough to be bearish. Now, a lot of people have a contrarian view, saying that, well, if people are so invested like this possibly has to be the top. Well, yes and no. This is just one statistic, right, showing you that usually, right, it's kind of contrary to that, as a matter of fact. Usually when you usually they're the opposite, right? Usually when the markets are super bullish, you can just look at a few times right here, right? When the markets are very, very bullish or looking into bull phases, that's when you kind of get fund managers being the lowest allocated ever because, well, they kind of want to participate in those gains. Where do they raise the highest amounts of cash? Literally at the peak of the bottoms. It's just kind of funny, right? You look at 08, you look at certain portions in the dot-com bubble, you look at 2016 as well, you look at April 2020, right? Which was literally the bottom, okay, of the pandemic before the Fed started juicing with low interest rates and stimulus checks. And as well, October 2022, which was literally the bottom of the bear market in 2022. And most recently, April of 2025, which was literally the bottom of tariffs, right? So maybe it's a contrarian to the contrarian indicator. Anyways, I figured I should bring this one up to you guys. Additionally, as well, Bank of America Global Fund Manager Survey investor sentiment is the highest since July 2021, which is pretty good, right? Good sentiment leading into next year. And last but not least, 57% of the fund managers say we're in for a soft landing, 37% saying no landing, and just 3% saying a hard landing. Now, this has been getting better progressively all throughout the year. No landing has went from about 6 of the fund managers all the way to 37 of them. The soft landing is also very high right now. More people have joined team no landing at all, and hard landing is basically diminished from something to absolutely nothing as the year has moved on. So sentiment across the board, and as a result, institutional positioning still remains bullish, but I've been bringing you guys these statistics for a very long time now. Now, some company-specific news, and I promise after this we're done, but all this is very important to our analysis, right? To kind of keep afloat or keep abreast of everything going on in the markets right now. Google-owned Waymo is reportedly in talks with potential investors to raise money at a valuation of at least $100 billion. So will Google be spinning off Waymo into a public entity? Curious, and we will have to keep a look on this one. But Waymo's been making some good advancements, and I guess the competition with Tesla will rage on, this time maybe in the public markets. Moving on further, Warner Brothers Discovery, some Netflix news, is preparing to tell shareholders to reject Paramount's $30 per share cash bid and back the existing Netflix deal at $27.75 in share and cash and stock instead, saying pretty much they do not want to be a part of a deal with Paramount overall. They think that they would be better served under Netflix. And additionally, after that news came out, well, one person who was backing the Paramount deal, they said basically Warner Brothers saying they didn't really want to be backed by the Ellison family. That was kind of the direct quote from there. And another person who was backing that deal also backed out too. Jared Kushner, Trump's son-in-law, has backed out of the Paramount Warner Brothers Discovery bid. His investment firm said in a statement, with two strong competitors vying to secure the future of this unique American asset, Affinity has decided to no longer pursue the opportunity. We continue to believe there is a strong strategic rationale for Paramount's offer, so backing out of the deal. So now Paramount losing backers, unfortunately, for the deal. So maybe, just maybe, they will be able to, Netflix will be able to secure this deal. Netflix's stock price reacted favorably to this in the after hours. And last but not least, Visa with some news coming. Stablecoin settlements in 7 days using USDC. Visa has been building out their stablecoin networks and their stablecoin offerings, now offering US institutions the possibility of settling with Visa in Circle, in USDC over the Solana network, which is very interesting. And the Cross River Bank are the first US banks, or sorry, Lead Bank and Cross River Bank are the first US banks to join Visa's pilot program. More to come through 2026. And of course, that did wonders today for Circle's share price. As you can see, the stock was up 10% on that. Unfortunately, still down on the week, but stopping the bleeding for now, right? So those are all your news headlines for the day. Hopefully you guys enjoyed. Now, let's jump into some charts. I figured I should always present to you guys all the news that's happening right now, just to kind of keep you guys up to date, right, with what's happening in the tech landscape, kind of justify the moves, what's happening with some government stuff. Obviously, when there's earnings, I can do less of that, but when there's no earnings, we can do a bit more than that. I figured it's an interesting segment that I've been including more and more into the videos. I guess I'll never be able to make sub 1 hour videos, guys. I've kind of come to that conclusion now, because if I didn't do the news segment and no earnings, this video would probably be 45 minutes long. But I know that you guys have told me that you guys like more context than less, and you enjoy the hour-long videos. So I guess this is now my niche, right? I guess we'll never be able to do the 20-minute videos anymore, 30-minute videos like I did back in 2023. But hey, maybe that's my competitive advantage on YouTube, is just giving more information than less and not leaving you guys in the dark. So moving into the charts, let's get into it. So on to the S&P. The S&P started off really red, and then big tech kind of provided some relief for this chart. Now, keep in mind, guys, over the last, what is this, like almost 14, 15 trading days, we've been holding this tiny little area right here, 680 to 679. I usually don't bring small areas like that, but when you lose an area of consolidation like this and kind of break down under it, you may just have a better chance of going into our further support level. If we do get further consolidation, and there is one catalyst for further consolidation, which is, well, we got Fed members speaking tomorrow, obviously. And then on Thursday, we do get the consumer price index. So the door is open for more consolidation. We have lost the daily level, and we are now embarking into consolidation. That being said, so we're right into support as well. 50-day EMA is right there, 674 to 666. But when you lose a temporary level like this, right, you got the hourly downtrend, right? And now you're back testing it as resistance as well. It might take the bulls a little bit of time to kind of get their bearings back, right, and build some momentum. If we have further consolidation in financials, healthcare, and the rest of the market that was kind of supporting us this entire time, they deserve a breather, man, because they've been picking up the slack for big tech for like a week and a half now at this point in time. If big tech doesn't offer more than the performance that they did today, and just, you know, we need like big, like 1% days, right? I mean, Meta was doing good, Tesla was doing good, but you need better days across the board, right? Apple soft, Microsoft a little bit soft here, Amazon very soft on the day. You need some of these bigger names, and Google down as well, to really put in like the 1% plus days. If you want to see the S&P really break structure, regain the hourly, and put an end to this consolidation phase right now. But as of right now, we're still looking like a little bit of weekly consolidation is upon us. I do believe it is healthy consolidation in the context, though, of a nice weekly uptrend with a ton of space above our weekly higher lows, 651, for a bit of consolidation here into this area. So this week might just be kind of like a week where you just have to absorb some of the short-term volatility and stuff like that. But there were some phenomenal opportunities, especially if you paid attention to my top 5 options video on Sunday evening. I was saying that we may want to wait until today to position for some short puts and maybe get some of the better entry levels. And a lot of those top 5 options plays, guys, and even a lot of the bonus plays became available this morning. So hopefully you guys are able to kind of pick some of these bottoms before these big tech names kind of turn green, understanding that you were coming into support and that the volatility would have been pretty good this morning for locking in some premiums for the next couple of weeks as we move into the Christmas holiday. Moving into QQQs right now, and that's what I like doing, guys. When we're lacking direction, I love to sell some put options on my favorite companies below the market, but you guys know that by now. It's my favorite type of trade, right? When it's not a trending market, it's tough to go for short-term call option swings or stuff like that, right? Moving on to QQQs right now, the bulls stopping the bleeding today, but still big daily consolidation underway into support right now, 613 to 605. We'll be waiting once again on the smaller time frames for an hourly trend change. If you don't get that, consolidation will continue, and good thing for us, we got a lot of space here. We're into the 12 weekly EMA. The bulls never lost the weekly. It was very dicey there for a minute, right? But now we're just kind of embarking onto this either sideways consolidation period, which reminds me oddly of December into January 2024, or the bulls are just looking to reset a little bit higher lows before making a push here into the end of December. I'll remind you, the Santa Claus rally is not before Christmas. Despite the name, it's actually after Christmas, so maybe it should be called the New Year's rally, but it's usually between December 6th and the first few trading days of the month of January, so still a lot of trade left there. We'll see what happens, and a few volatility catalysts on the table, such as CPI on Thursday, but thereafter, guys, there's not much into next week at all, right? I mean, we get the GDP preliminary number for Q3, but we already got it. This number just gets revised a few times over the course of the quarter and then just gets published officially, so we already have this data, and there's not much else to move the markets in a big way, except for Friday, or rather Thursday evening. You do get the Bank of Japan interest rate decision, which is not on this chart right here. So by the end of this week, we have a few more volatility catalysts that can continue this consolidation, and then you're kind of done with the volatility catalysts through the Christmas holiday break. So we'll see what we get. But definitely my favorite types of orders right now in the market are either building further positions for my long-term portfolios in a nice casual DCA fashion, whether those are our core companies or if you like ETFs, or if you're trying to buy the dips on some of these high beta names that have consolidated a ton over the past few weeks. Nice opportunities to nibble on those positions, but also short puts under the market. I'm not really building any short-term long swing trades, not just yet in this trendless market with a lot of volatility. Moving on to XLF financials. Financials, bit of consolidation, right? But it's very normal. They kind of popped off the top right here, daily overbought conditions. And if we're looking for a retest area, what better location to do it than the previous all-time highs right around 54 with the daily 12 EMA there as well. So further consolidation could be upon us. I mean, the banks moved huge, right? Bank of America, new all-time highs, Goldman Sachs, new all-time highs, Morgan Stanley, new all-time highs, right? So we are extended, whether you look at this on the daily or weekly timeframes. It wouldn't be so strange to get some further consolidation on XLF. Nice weekly push right now. If the bulls get a little bit tired, just looking for a casual back test, which might set you up really nicely for a push into early 2026. Moving into the healthcare sector right now. So healthcare, I mean, this one is a bit confusing if you're looking at the daily chart. It was a daily uptrend. We unwound the daily uptrend, and now the bulls have to work very hard to get it back. This was a very nice bounce, though, if you're looking to get it back in two steps over a 618 bounce. So you might be able to look for something kind of like this if they want to recapture the daily uptrend. If the bears are too powerful, though, and you go for the daily downtrend break, well, essentially what you're trying to do here, guys, is just consolidate this chart a little bit more. The monthly chart provides a bit more guidance. Monthly downtrend, nice engulfing move. I've been looking for this retest area, guys, right? Whether we hit it quickly or just slowly move down into it. I mean, healthcare was a big market leader for the last quarter. They might be a little bit tired right now. We hit weekly overbought conditions. We were into daily overbought conditions too, and obviously clipping into the previous all-time highs. If we just kind of slowly curl down into here, I will be building more positions in some of my favorite healthcare names right now. At least if we pull back down there into the XLF, call it 148 down to 145 level. And now lastly, or now before last, SMH. SMH also consolidating a little bit more today. Not enough of semiconductors were there today to participate. NVIDIA, Broadcom, AMD were there, but you can see large swaths of this infrastructure play, right? We're down, and even some of your semiconductor equipment companies, such as LRCX, AMAT, etc., were also down. So not enough to keep it up, but this was a daily downtrend into big engulfing move. And now looking for the daily higher lows coming into support, 344 down to 325. We'll see if they can get it done in one clean shot, or if they have to spend a bit of time here and reset the time frames. That is also probably valid, but the weekly bulls have never lost control just yet. Maybe just a period of slight consolidation, such as we had back here or back here type of thing, meaning we may not go back to full bull uptrend immediately. If they consolidate sideways for a while, it would not be the worst thing, and I will keep playing short puts on my favorite companies, which right now are AMD and NVIDIA, but pay attention, you also got a big Micron earnings release tomorrow, and you guys know how it's been over the course of the last big tech or rather the last big semiconductor earnings, right? TSM had great earnings. They only went down. Phenomenal earnings. They just went down thereafter. NVIDIA had great earnings. all they did is just go down. AMD had great earnings. They held up for a little bit, but eventually just went down because of sentiment. Broadcom had decent earnings, but failed to reassure investors on the call. And as a result, they went down. And of course, Oracle, right, the data center player, well, they went down after. They're not really a semiconductor company, but just showing you guys everything associated with the AI trade, right? Even Microsoft, right? They had phenomenal earnings, right? They popped after earnings, or rather popped before earnings, and then just went absolutely straight down ever since. So if Micron ends up in a similar landscape, you would not be surprised to see further consolidation in the AI trade overall. But I do believe that this indeed is a nice buying opportunity. Moving into the Russell right now, the Russell also faltering a little bit. It was a daily uptrend. We broke the lows, unfortunately. So now you're forfeiting the daily uptrend a little bit. They have 1 day to save this. If not, if you move a little bit lower, this whole support area, red box 251 down to 248, that will become resistance, looking for the daily downtrend and looking for what I've been waiting for a while, which is just natural weekly consolidation, right? Nice engulfing move on the weekly right here, looking for a bit of a higher low, maybe all the way down there, 245, down to the pocket, 241 could be a breakout retest area, and maybe before further longs are established here into 2026. It's very tough to be against growth when your summary of economic projections looks like this leading into 2026. So please keep that in mind. The rest of the other sectors, we covered them yesterday. So just go back and watch yesterday's video in terms of XLP. I'm still bullish in the long term for staples into 2026 rotation trade, but short term resistance, right? So just watch the flow of this daily uptrend. Same thing for consumer retail right now. Retail's been moving really hot in the most recent few weeks. Overall, huge engulfing move on the weekly timeframes. If they get tired, you know the drill, looking for the higher lows, for establishing new higher highs and going for the monthly uptrend shift into 2026 as the consumer landscape should, I mean, if you follow the analysts and you follow the Fed, should be getting better into 2026. I know many people don't believe that, but if you are willing to take upon you that risk, there could be some decent risk reward in some of the consumer retail players out there overall. And that's kind of your overall landscape. The VIX not doing too much, so we won't spend too much time on it. But today, the VIX had a chance to jump off of those labor reports, but no fear. Nobody buying insurance, right? So that being said, it's going to be very tough. You got two remaining catalysts, the CPI and the Bank of Japan rate hikes possibly coming on Thursday. Those are your two remaining catalysts to pop the VIX and get people a bit more into a fearful mood. But as of right now, many players, institutions, Wall Street, and individual players alike, I guess, were not really willing to buy insurance after that jobs report today. So you have consolidation on the indexes right now, but you don't have any fear. So maybe this is the smoking gun, meaning maybe this is the one that allows you to call the bluff on this decline and build some positions. At least that's how I've been viewing it recently. And now moving on to our other assets such as gold. Gold breaking a bit higher today, but gold really hasn't been doing anything over the last 4 days. It's still a very nice daily uptrend, right? Just sideways consolidation, but gold has been moving slow. The next upside target remains all-time highs, 43.80-ish, and then of course up to the psychological $4,500 target. The bulls are still in full control right now. Trade is a bit extended for entry longs, daily overbought conditions right now, but the bulls have been just steadily moving this chart on forwards right there. So not too bad at all, but just no active positions for me right now. But congratulations to all the people who have held gold in their portfolios for years and years and years. This asset has truly outperformed this year. Year to date, gold is up a whopping 64.71%. Moving on to our crypto analysis right now. So Bitcoin, sadly, still in the context of a daily downtrend, barely holding on to this support area, right? Which is pretty much 94 down to about 87, 86-ish, right? The top end of there, the bottom end of these guys right there. We're barely holding on to it, man. And to be honest with you guys, right? After losing this daily uptrend again and having a weekly bounce, which was a very soft weekly bounce, talking about 38%, I mean, the tone is very bearish. You would assume you're going to get the bearish breakdown, right? But if you get some renewed bullishness in the overall asset market, maybe they're able to prevent that. All it says is when you get such a soft weekly bounce like that, right? Okay. Well, the probabilities of revisiting the lows or breaking are high, right? You have like 70, 65% probabilities of that happening, but not 100%. The bulls still have a chance to save, which is why it's so tough, man. It's so tough to swing trade this when you don't have a solid weekly bounce underway. We were saying that this was the breakout long trade, right? For continuation of the weekly uptrend. The stop loss is down there. So if you were entering that trade, you are still not stopped out. You still have a chance, but just be cautious with those stop losses overall. If you do get the breakdown, guys, you are heading down below here to about 74,000. That's it for Bitcoin. So for me, building long-term positions in Bitcoin, yes, but no swing trades for me, right? Moving on to Ethereum right now, kind of the same concept, right? You have the nice daily uptrend right now. You lost the daily higher lows, sadly breaking down through that, but you are holding the last area of support, which is about 28.25 up to about 32.72. It's this whole chop zone there. The previous supports, the previous resistance, support again, resistance again, support again. You guys know the drill, right? In the context of a sweeping weekly downtrend, the bulls are trying their best to make the best use of this bounce. It's a 50% bounce, this little bounce right there, right? Little, well, it's 50%, right? They're trying their best to secure the weekly higher lows and go for the weekly uptrend break, but still right now, no breaks are had in crypto as the sentiment is still very soft. So Ethereum as well. No short-term swing trades for me. However, decent area if you are a fan of the crypto thesis over the next few years. You would want to still be accumulating and DCAing these positions as we haven't really lost the monthly timeframes. It's just been very soft, but it might move a bit slowly into 2026 overall. And that's everything for your overall landscape in terms of indexes and other assets. Now let's move to big tech, shall we? We'll be going through these a little bit quickly because not much has changed, but you got some nice bounces today. Apple still in the context of a daily downtrend right now into support, 275 down to about 266 overall. What they're going for is just a bit of weekly consolidation. A lot of room above the higher lows here at 265. So they're just kind of looking to curl down into here. Am I taking any swing trades? No, but if you had to establish some swing trades, you would be establishing them with a stop loss below this low, and then they take profit towards the $300 psychological. It's not that bad of a risk to reward trade. It is a greedy trade though, considering where our higher timeframes are. It's a 2-to-1, 2.5-to-1 swing trade opportunity, but I mean, the monthly chart is very extended right now. The weekly chart is also somewhat extended with very high RSI levels and a MACD that is not looking the best in terms of momentum follow through. So it's a very greedy long. I'm not personally interested. The risk reward is there, but if Apple chooses to consolidate, we need the rest of the big tech market there to uphold, right, the declines in either Apple or Google. Because for now, over the past few weeks and months, it's been nothing but the Apple and Google show. Everything else, whether it's Amazon, Meta, Microsoft, Netflix, NVIDIA, have done absolutely nothing. But shout out to Tesla, though. They've been trying, but that's very recent, right? So if Apple and Google choose to go into their monthly consolidation phases, we need the rest of big tech there to kind of pick up that slack, right? So that being said, not interested in Apple. I'm also not adding any long-term shares. Valuation is a little bit too stretched for me right now, but I'm holding on to all my shares. I think they'll have a good Q4 and a good 2026 overall. So I'm holding, and you would find me adding back here into the 12 EMA. Moving on to AMD right now. I don't know why I said it like that. AMD, daily downtrend right now for AMD. Unfortunately, still in the confines of weekly consolidation. We will see if the bulls have it in them to reverse everything. But first, you need to reverse the daily, right? You need to do something like this, get an engulfing move, get the daily uptrend. Then you would confirm a weekly higher low. And then you can say, all right, weekly uptrend. Now we've confirmed the monthly lows, and maybe we're going for further upside. But don't get your hopes up. How I'm playing this one, very simple, guys. Selling short puts down below in that area. And if we do fall a little bit more here, I will be accumulating a bit more shares. Very simple, right? We do not have short-term price action. So it's useless calling the bottom right here, especially that we're in the middle of nowhere. We're literally in the middle of nowhere, right? I mean, you could argue that these guys are a bottom level of support, but are they really that strong? Not so much, right? So there's a nice little gap to be filled here down into our, well, it actually stems a lot lower, right? But I will be bidding down here for some short puts and possibly adding a few more shares if we dip down into further monthly consolidation, as the valuation of AMD around 200 is very attractive. A forward peg ratio of only 0.91, huge growth, and the AMD thesis for 2026, 27, and 2028 is still very much alive. Moving on to Amazon right now. Amazon still consolidating, still in a daily downtrend, and still rejecting from resistance. 240 down to about 230, rather 238 if you want to be specific, down to 227. You guys get the drill, right? This has been a big area of rejection for the bears, right? In the most recent past few months. Overall, the weekly time frame also is not looking the best. We're basically back in the chop zone right now. So the way that I'm playing this one is accumulating some long-term shares for Amazon and also selling some put options below the 220 mark down into the 210 location. I think it's a very nice monthly backtest area. Huge support from the prior months. The 12 EMA is there as well. And the valuation is quite compelling, 28 forward PE and a 1.4 peg. So I do want to be taking advantage of Amazon all while it's down here because the fundamental thesis is not broken at all, guys. They had phenomenal earnings. They just got dragged down with the rest of the tech sector overall. This is probably one of my favorite plays. I mean, especially if we're looking for either resurgence in tech names and a resurgence in the consumer. Well, this is your biggest consumer stock of them all, right? So maybe the e-commerce business sees some good numbers in 2026 if we really do get that consumer spending coming back up a little bit more. So a multi-pronged thesis on Amazon, let alone all the other things that they're doing, which we did cover during their earnings, such as their advertising business and their robotics business and their free cash flow and margin gains, etc. Moving on to Google right now. Google down about 0.51%. Daily downtrend still underway. We've been talking about this, man. You lose the daily uptrend and you go into losing the daily 12 EMA as well. You're just in a weekly consolidation. And I mean, we need it, right? We were very overbought on the weekly timeframes. The monthly is super stretched as well, monthly overbought conditions. So maybe now it's Google's turn to consolidate, right? Where all the other names have consolidated already. Maybe now it's Google's turn. They did a good job of carrying the market. I'm not saying it's not a great company, right? I mean, we were talking about it. I was accumulating a ton back here, and you guys know that. But now it just ran a little bit too hard, a little bit too fast, and it may just be time to consolidate. As all good things eventually have to consolidate, where I would be targeting would be possibly the 290 down to 270 region. And hey, if they just stop here and launch for another leg, well, it just gets progressively worse. Then you're really extended from the 12, and the risk to reward becomes quite unfavorable. So I would like to see them consolidate sooner than later for this chart to remain in a healthy condition. That being said, I'm not buying any more Google shares up here. They're kind of at the top end of the valuation range right now. I have all the Google shares that I want, but I'm not selling any because my Google shares I'm wanting to hold over the next 5-10 years type of thing. But if you're trading and you want to trade out of some Google gains into the end of the year and rotate those gains into other names that have not had such a great year, such as Google, wouldn't be the worst opportunity for some better risk to reward. Moving into Meta right now. Meta, 1.5% to the upside. Not a bad day, rejecting from the support range down here, which is 645 down about 630. It's not the strongest range. I've been saying that for a while, right? There's not much here, but it's the closest one that we have. That being said, we are going to be on the watch to see, can Meta expand and try the resistance range again at about 680 to about 708. It doesn't look too bad at all, right? However, nothing is certain because we know the AI tech trade has been very soft and just plagued with negative headlines all over the place. So Meta's not looking bad. And we've been saying that, right? This entire area down here has been very attractive for building some long-term shares or some leap call options. If you're feeling bullish like that, I'd say 21 for P at 630 and a 1.63 peg with a decent price to sales metrics in the future, right? And they do bring in a ton of margins and a ton of free cash flow as well. So what the bulls are trying to do essentially here, guys, is trying to reset the weekly uptrend, right? And put an end to this monthly consolidation. And you guys know me, I love bidding around the 12 and especially between the 12 and 26. So the big accounts out there, we've been selling some short puts below these lows down there and also accumulating some long-term shares in this region. Meta is probably a very strong bet here. Nice risk to reward into the next few years. Moving into Microsoft right now. Microsoft, once again, trying its best to hold, but daily downtrend is in full swing right now. So now the bulls have to start everything from scratch. You got to get the uptrend back. Give me a big bounce. Then we can talk about maybe their ability to challenge the resistance area again, 500 down to 488. They struggled with it for a long time. It was big support for a while. Now big resistance. We are below the 200-day moving average as well. And as a result, guys, we're still in very large weekly consolidation. We'll see. Can the bulls save this and go for a new weekly uptrend, or will we break a little bit lower? I'm fine either way because you guys know I've been buying Microsoft shares because at 470 or around 470, it's under a 30 forward multiple, a 1.66 peg, which is good. Microsoft usually trades a lot more rich than that, and there's nothing fundamentally wrong with this business at all. If anything, they've just been caught up in the whole OpenAI sentiment since they are closely associated with that business overall too. That being said, we are literally into the 12, and I've been talking about this pocket, guys, especially if you have a big accounts, right? Selling put options down here, 460 to 450. Fairly nice proposition in terms of historical statistics. It's usually been a very good proposition to be bidding between the 12 and 26 EMAs on Microsoft. So I will continue to do that with some short puts, but also accumulate some shares into this little pocket and just kind of not focus too much on the short-term price action. Focus on long-term statistics and focus on longer-term fundamentals too. So Microsoft, we will see, man, but the bulls need a lot of work, right? They got to put in a lot of work to reverse these trends to be able to say, all right, that is the bottom of your monthly move and you're looking for the expansion move higher. You got to reverse the daily and then you got to reverse the weekly, right? Moving on to Netflix, which was the recipient of some good news today in the after hours. You see here that they were up 0.85 in regular trading, and another nice, call it another 0.8% in the after hours. Although Netflix too has a lot of work to do, guys, right? We're all the way down here, almost oversold conditions. We were oversold conditions at the bottom end of our crucial area of support that the bulls have defended multiple times in the past, right? Previous resistance and the chop zone for price action is kind of a two-part area, the lower end of which is all the way down there overall. So please keep that in mind. I'm open to either or possibilities of Netflix resetting a daily uptrend. You got to break 96.65 though. I mean, it's soft, right? The bounce was very soft, but they can do it. It's a very slim chance, right? But they can do it. You're going to need some broad market support for them to do it though. And if all else fails and we come a bit lower, guys, well, he'll be heading lower, 86 down to 81, which would probably be close to weekly oversold, which would be the juiciest opportunity of them all on Netflix. That would be the 26 EMA, which very rarely gets tested on the monthly timeframes here, and a huge top to bottom correction here of 35% potentially. So I'm buying Netflix. I'm doing a couple things on Netflix. I'm buying Netflix Leaps down here. And I'm also buying shares for my long-term portfolio in around the 95 area. It's finally back under a 34 price to earnings and a 1.5 peg, and very nice forward projections for the company overall. There's nothing wrong with this business. It's a sentiment trade. And how many times this year have we found sentiment dip opportunities? Many times across many different names. Look at the EPS growth through 2028 and look at the revenue growth through 2028. Nothing wrong with this business, just a sentiment dip. And as a result, I do want to be buying, but long-term, guys, because we don't yet have the daily uptrend breaks, which would kind of fire off some short-term trades for us with a defined stop loss. As it is right now, you are just guessing whether or not this is the bottom. You need to see a daily uptrend for short-term positioning. Moving on to NVIDIA right now. NVIDIA trying its best today, 0.81%. We are still below the resistance range, 185 down about 178. It's been a big area of price action in the past, and it still is a very big area of price action in terms of rejection. I mean, the short-term timeframes are all over the place, right? We tried to go for the uptrend. They had it. We've now come back down, retraced everything, right? So a pure loss of momentum. At this point in time, guys, if you really want to see the upside break, you're going to have to break and close above here. Break and close above 185, and then we can talk about daily uptrend expansion. We can talk about the rekindling of maybe a weekly uptrend expansion by the bulls, and maybe the end of monthly consolidation. But as of right now, NVIDIA is just acting really soft. However, there's an order type for this, right? When you know that the valuation of something is pretty cheap down here, talking about at 175, a 23 forward PE and a 1 peg through 2027, right? Which is very solid in my opinion, and phenomenal earnings, but the price action's been soft. Well, there's an order type for that. It's basically selling put options down here towards the 200-day EMA into the 160s area, which is also your 12 EMA on the monthly chart, which usually has provided some good buying opportunities for NVIDIA when we take a look at the past few years worth of time, just in the context of very healthy monthly consolidation for the stock overall. So that's what I'm doing on NVIDIA, accumulating, right? Either long-term shares or leaps if you're interested in leaps, but late 2027 for leaps, guys, is how I'm playing this, because it could still be a bit bumpy, especially even into 2026 a little bit. We know that most of the boom comes end 26 into 2027. So my call options are positioned end of 2027 for that reason. So shares, deep call options, and additionally short puts under the market to fund all of that. Moving on to Tesla right now. Tesla, new all-time high break. Phenomenal move by Tesla recently. And even today, another 3.07%. Looking very strong here, breaking out from the top. And, right, maybe the whole rest of the market just follows Tesla's lead right here and says, you know what, maybe things aren't as bad as they seem. Maybe we can go back to risk on a little bit. I don't know, but Tesla's definitely putting in a lot of work, man, for its respective indexes, right? If the bulls get a bit tired here after the all-time high crack and maybe a little bit of daily overbought conditions, you might be looking for a bit of a back test down here. The good old breakout retest, which would be roughly the 460 range down about 445 for possible new swing trade long entries. That would be a daily back test. It would be a weekly back test. Nice weekly downtrend into engulfing move. So the engulfing move into the back test, cup and handle, right? For possible further trend appreciation. If they just don't look back, you are going straight to 500 psychological dollars. Not looking bad at all on Tesla. Beautiful price action. And even the monthly, guys. If they close the December monthly candle like this, it's going to look pretty good for some expansion into early 2026. So congratulations to all of the Tesla bulls out there. Chart is looking very good. Moving on to Palantir right now. Palantir up 2.5%. We knew that Palantir was into daily consolidation recently. It's in the context of a nice daily uptrend, using the EMAs as support and using this big old box, right? We got to the top end of it. So they cleared most of the resistance range, and now they're using it, trying to use it as support to establish the continuation pattern for the daily uptrend. That being said, it's not looking too bad. Daily higher lows established at the lows of the Friday session and just looking to expand a little bit. Next target obviously is going to be 200 psychological again. So Palantir looking pretty good. The weekly, I mean, this is a nice size bounce, man, which means if even the bulls get stopped out here and they retrace a little bit, look at the bounce size. The bounce size is really attractive on Palantir right now. It's a 618 bounce. Why did this matter? Because you lost the weekly uptrend, right? They did this back here again. You remember? They lost the weekly uptrend and they engulfed the move. I don't know if they'll be able to engulf the move this time or if they'll have to reset it in kind of 2 stages, but they did lose the weekly uptrend here by losing these lows. So if you can't do the full V shape, you got a lot of room for the 2-step procedure right there for Palantir. I'm not taking any swing trade longs up here. I'm just holding all the shares that I do have. And you guys know I said it previously, when Palantir does come back down here around the 12 EMA is where I kind of want to bid, but we're far away from there now. You're going to need a big market decline to bring Palantir back down there. So congratulations to the Palantir bulls, recovering very nicely right now. SOFI up about 3% after yesterday's 5% down day. That being said, daily downtrend was set in motion, and you know, the larger timeframes here, the weeklies, just sideways consolidation, right? It's been a really nice stock to write some put options down here. We've had so many opportunities over the last few months of selling some put options down there and also for accumulating some shares. If you guys are looking to build some further SOFI long positions, I mean, I'm not going to comment, but I know many people are rebuilding their call option positions for late 2027 expiries or rebuilding some share positions as well. Under $27, you got a 1.1 peg and a mid-7s price to earnings. So although the short-term price action is not extremely bullish, right? First, you need to recapture this daily uptrend, make an attempt at resistance, 30 to 28. And on the weekly, it's just very choppy. And the monthly just also displays that this is very simple monthly consolidation, right? Very simple monthly consolidation before possible further longs. Well, maybe an accumulation phase here of shares, or if you guys are doing leaps or short puts under the market, might just be the best location for you to kind of target overall. But SOFI, not looking too bad. I will keep playing short puts under the market as much as I can to just farm that premium. Moving on to Uber right now. Uber down about 1.15%, almost daily oversold conditions again. Sadly, daily downtrend for Uber, but we might be coming into the final resting place. It is a weekly downtrend, so the bulls need to do a lot of work. So you're not looking for short-term massive gains on Uber here. No. The way that you could be playing this, though, is either accumulating long-term shares around 83 or lower, very nice forward valuation, a 23 forward PE, 1.5 peg, 5% free cash flow yield, and very strong revenue, monthly active users, booking metrics, and trips metrics as well, whether those are mobility or deliveries metrics, right? Strong, but still being brought down by the whole, robo-taxi narrative overall, even though that robo-taxis are only in a few locations so far, and Uber literally does 3.5 billion trips, right, in a quarter, which is absolutely ridiculous. So that being said, a lot of sentiment issues surrounding Uber right now, but the chart definitely looks really good down here into support, previous resistance, current support for Uber stock right now, and as a result, short puts or rebuilding, or rather adding to some long-term portfolio buys if Uber is your style of company, may not be the worst proposition. And last but not least, Taiwan Semiconductor Company coming down 0.3%. We know that this chart has kind of been all over the place as well, kind of like NVIDIA, right? Many failed breakout attempts, many attempts at breaking down through support, but as a result, we've just been kind of in a range for the past quarter, right? Since September, pretty much. September, early October, we've just been stuck here. So the daily price action is a little bit awkward, right? We tried to go for the daily uptrend breakout, rejection, and now the bulls have to regain all of that momentum and do it all again. The weekly time frame for me shows the clearer picture here. It's literally just kind of sideways consolidation in a very wide range right now, building into its fundamentals and just consolidating this monthly time frame a little bit. If you do get the breakdown for ever which reason, let's just say Micron sends all the semiconductors down a bit lower and TSM breaks down below its support, it comes into the 12 EMA, I'll be a big fan, kind of like NVIDIA, right? Of playing the moves into the 12 EMA. As of right now, though, I think there are better risk to reward opportunities for swing trades, right? Or short put opportunities. But that being said, TSM at 295, it's not bad. Like, I'm not selling any of my shares up here, right? If anything, I'll just be waiting patiently to add. And if not, there's many other companies that I can add to right now with better technical setups overall. But the company's not super expensive overall up here at the 290s region. It's a 1.7 peg. So it's not cheap. It's not extremely expensive. It's just kind of right in the middle. It's more towards expensive than not right now, but still not terrible overall, but no trades on TSM for me right now. I'm just holding all of my current shares that I have in my long-term portfolios. And that is everything, guys, for your overall market rundown. Hopefully you enjoyed that. Now, let's spend a couple moments here on the biggest gainers and losers of the day. Now, I'm not going to go through all of them. We went through almost all of them yesterday overall in terms of the themes for some of the high beta names overall. You guys kind of know my stance on those. I'll just kind of highlight some plays that I've been looking at more closely recently in terms of positioning, either for some short puts or accumulating some positions. Hopefully get you guys some nice insights on those. So new holdings, pay attention to this one, guys. If we kind of come back down to the $15 range, I think it's going to be a very nice breakout retest trade for some possible further longs. We established our projections here for 2027, 2028 base and bull case scenarios, which do see the stock leading into the mid 20s to low 30s area into the next few years respectively. So I do want to be paying attention to these pullbacks into this area. If ever we do get offered that trade, it could be quite interesting for some more further swing trade longs. If you move a little bit further down the list here, Rubrik is another one that I am paying very close attention to. They had phenomenal earnings, but sadly got brought down with the rest of the tech trade and the rest of the tech market. We've now retraced half of the earnings gains, but a Rubrik is looking really good, man. I want to be building some positions, further positions potentially into the next few years for Rubrik, because the growth for this company is indeed quite staggering. The average price targets are well into the $100 range. The EPS will be flipping positive into 2026, which is something that I pay close attention to. And the revenue ramp is quite significant here. Rubrik doesn't trade at a crazy valuation in relation to some of its cybersecurity peers. And it's definitely probably one of my favorite bets in cybersecurity into the next few couple years, especially with SentinelOne as well. I know that these two charts don't look very good. Rubrik retraced a lot of its earnings gains. SentinelOne just didn't have any earnings gains, but this one also representing some good risk to reward, just a massive accumulation phase. I'm not going super heavy, but if I'm looking at two cybersecurity names into next year, I'm kind of going away from the kind of overvalued leaders here in terms of CrowdStrike or the Zscalers of the world, which look at this chart. It looks like a disaster. The Datadogs as well, which have retraced everything. The Cloudflares, which are also very, very rich in terms of forward valuation multiples. I'm trading the ones with still very good growth, but a little bit more manageable multiples and going for that growth expansion, that multiple expansion into 2026 and 2027. Just a few key names that I'm looking at in terms of cybersecurity overall. If you take a look, Melly for me is a buy. It's been a buy yesterday. It was a buy last week. It was a buy last month. It's still a buy. 26 EMA touch. Usually when you find these 26 EMA touches for Melly in the context of nice bull markets, you will be greeted with some nice expansion at the next few years. Under 2,000, it's a 0.78 peg. What more can you want, right? Very low multiple in terms of the earnings growth. Look at these growth metrics, right? These are averages through 2028. Look at this growth by Mercado Libre. I know the stock price hasn't been cooperating, right? But there's a disconnect. Look at this growth on EPS. Look at this growth on revenue as well. So this monthly consolidation has lasted a while, and I do believe it's probably coming to term soon. So I want to be accumulating as much Mercado Libre. Mercado Libre, probably one of my favorite international growth stocks in the next few years. And even Grab, right? Grab is also another international play that I've been building more and more of a position into. The longer that they offer me some shares down here between the roughly let's call it $5 and $4.50 range, I'll be building a bit more of a position. Excuse me, I'm losing my voice, talking too much. I'll be building more of a position here into Grab. I know the chart doesn't look that fantastic. Kind of gave back all of the move right there, but the forward projections for Grab are looking very good. The analyst price targets are well into the $6 range, and they are now flipping into positive EPS, which I've said many times. This is what I look for. I look for companies who are flipping to profitability as they scale with still very attractive revenue growth rates ahead of them. So Grab will probably be another international play that I'll be kind of building into over the next over the next few days and weeks if we do stay down here a little bit more. Now, we covered everything else yesterday. I mean, if you're talking about the data center trades, these ones are buys for me. They're buys from here all the way down into their 12 EMAs, whether it's this one, whether it's NBIS, whether you're looking at something like an APLD potentially, right? Either selling put options close to the 12s or even CIFR, right? Selling put options down into the 12s or accumulating some positions on these drawdowns into the 12s. I am a pretty big fan of kind of taking on some of those trades overall. Depends on which one is your favorite. For me, I'm building in NBIS and IRN, but there are many attractive opportunities out there. Other ones that I kind of wanted to bring to your guys' attention are names like Vistra, some of the energy players, right? Some of the energy players looking really good, guys, for just monthly higher lows into their 12 EMAs. looking good into 2026 overall, whether it's this one, whether it's Next Era Energy, attempting, the good old breakout pattern here. They're trying for it, right? The nice kind of cup and handle formation right there. They're trying for it. It's been consolidating for a long time. Or Duke Energy, if you guys like Duke Energy, retesting a big support range from 2022 overall. Not that bad as a utilities player. It also pays a nice dividend. So there's many energy names on my radar moving into 2026, whether these or some of the battery storage names like FLNC is probably one that I'll be paying closer attention to. Going to start building a position into this one as well. I mean, them and EOSC. I know a lot of you guys like Bloom Energy as well. Just pay attention to the back tests here in the 12 EMA. The one that I'm looking closely at, though, is FLNC for the battery storage purposes overall. Those are kind of the main ones that I'm looking at that were kind of down today. We covered a whole lot more of them yesterday and in prior videos, so you guys probably know where I stand on many other things, such as Robinhood as well, right? Selling put options down here, or if you're looking to accumulate some positions, it's not looking terrible on Robinhood, this whole lower 100 range. If you're looking to kind of rebuild some positions that you may have sold closer to the tops, not looking terrible for the good old monthly high or low situation that Robinhood is currently embarking into right now. Those are just a few of the names that I wanted to kind of bring up over the course of the trading session today. And then to the upside, guys, we got huge moves by Resolve. Resolve up 28%. They gave really good guidance for their December revenue number, 17 million, and then ARR into next year of 200 million. It's trading for about $1 billion market cap. It's not profitable just yet. This is like one of my asymmetric bets. Very small position for me, but could be interesting in terms of how far we are from the average analyst price target. And as I said, not into profitability just yet, but if we just take for granted their expansion here of ARR into 2026 to 200 million that's a revised number up from 171, which is a pretty big revision, and into 2027 as well. They're not trading that much. They're not that rich in terms of forward price to sales. Just an asymmetric lopsided bet. I have a few of those. This one is very tiny. It's my smallest one of them all. I'm building a position in Ondas recently as well, trying to be building down here from the whole $8 down to about $6 range. I currently have some active short puts down there, so wouldn't be opposed to accumulating a bit more shares of those ones overall. There's a few more plays that my Discord members know about. They're not on this list right here, but some of the ones that I'm building in some of my accounts, tax advantaged accounts, of course, because we're going for the big gains here, not the small gains. No, the buy and hold gains over the next 2+ years type of thing, going for X's and not just 30-40% rises overall. Those could be very interesting if we're looking forward. We didn't talk about Affirm. Affirm's looking great, but I've been saying this one's been looking great for a while, right? If you're looking for one consumer name that could possibly be the beneficiary of multiple tailwinds, such as renewed consumer spending in a lower interest rate environment, well, maybe this name could be right up your alley, right? This is my favorite buy now, pay later company. I've said many times why it is, because they have arguably the best user growth. They have the best profitability metrics in the long term, and also they have the lower delinquency rates overall, and they're growing revenue and EPS at staggering ratios. And over here around the mid 60s, we're really good. This is a big engulfing move, right? A very big engulfing move, kind of like what Visa and MasterCard did just the other week, right? So it was a daily downtrend, big engulfing move, reclaiming support once and for all, 70 down to 63. So here or on any back test, if we're looking to build a position on Affirm, they're trying something here, right? They're trying to build a bit into this and set an end to this monthly consolidation period. It's been 4 months in the making, maybe looking good for some further upside on Affirm right there. Something very interesting. You guys know that on the channel, I had some call options from here, which we sold into earnings. And now we just might be looking for the reload opportunity and carry this one into 2026 and early 2027 as well. So all very decent opportunities, right? We talked about most of this stuff on this list, so no need to bring up any more names. We've been covering a lot of these recently. You guys know where I stand on most of the names on this list overall. So pay attention to the continued rotation into some consumer-oriented stocks, right? Some that have been left behind instead of chasing, the airlines overall, right? Airlines are just printing money right now. Some of the cruise lines as well have been moving relatively well recently. Some of the travel operators such as Expedia have been moving, printing recently. Look at booking.com. We kept saying it was a buy when we kind of broke down below there, going for the monthly back test. So we were building some longer term positions in here. Even Airbnb, you remember we were playing this one a lot down here, sub 120. I was saying it was a pretty good deal. Even this one looking really solid here for some expansion. And Airbnb has been really, really low, man. I have this one in my long-term portfolio. I've had it for a long time. And this is one of my only companies in my long-term that I haven't really seen any gains. I've been in this company for like 3 years, and so far no gains. This has been one big, long accumulation zone. So this one has not been a very big winner for me. All my other companies have been pretty big winners, but not this one. So this one is one that I keep adding to, right? Keep building the position, right? And it's not an oversized position. I just keep DCing into it as well as the rest of my companies on a monthly basis. So just keep that in mind. There are many nice opportunities provided you know where to look if you're looking for consumer coming back into 2026. So many AI names, many tech names are at good discounts. A lot of big tech names, a lot of high beta tech names, which we talked about in today's video. A lot of consumer facing names are also attractive, which we just covered right now. And a lot of very small cap names, you know, if you have a nice thesis, right? A lot of small cap names as well do make sense after these consolidation periods. So in this market, there's something for everybody, right? And even some of the industrial names, like there's even industrial names for a lot of you guys out there, right? Like Canadian Pacific or the waste managements of the world, or some insurance companies that have sold off a lot, like PGR, very solid company as well. So there's stuff for everybody in this market. There's Visa and MasterCard, which we keep talking about, going for the back test down here, which you've been looking for, kind of like the last area for entry longs into 2026, perhaps. There's something for everybody, right? So you just have to kind of look at the charts one by one and derive some of your favorite companies, establish if the price action makes sense to you, and just kind of establish a thesis and establish the trades, right? So not looking too bad today, some gainers, some losers, but we will look to see if the market kind of recapture some of the lost tech sentiment, because that's what's really missing from the markets right now. But that's all I had for you guys today. If you enjoyed it, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new. We do these every Monday to Friday after the close, but not this Friday. This Friday is my birthday, so I'll be busy this weekend, so probably no Friday upload. I know, apologies, but I don't skip them that often. And last but not least, if you guys have any questions, please feel free to leave them down below. I'll answer you guys as soon as possible, probably tonight, but if not, tomorrow over the course of the day. Always love hearing from you guys, and thank you so much for all of your feedback. Thank you for liking the videos. Thank you for subscribing to the channel. We're well beyond 11,000 subscribers now. Let's keep going. Looking forward to growing the channel more with you guys and, you know, making a lot of friends in the process. And speaking of making some friends, if you guys wanted to be a part of a trading and investing community, if you're tired of trading in the markets alone and you want to do so with over 300 other members, all looking to trade the markets in and out every day, but also build long-term portfolios and establish good trading habits overall, you may consider joining our trading community. The link to join us is down below in the video description. And as part of the community, you get access to a few different things. Number one, you get access to all of my trades in real time. So any trade ideas that I have or that I put into the markets overall, I definitely give those to you guys in real time. You guys can follow along with my portfolios. So that being said, you get all the access to the trades, whether they're the wheel trades, so selling puts under the market, any debit spread ideas, any leap call option ideas, any swing trades with shares on large caps or small caps. Everything that I do, guys, you guys get access to it. You also get access to our private morning live streams every Monday to Friday. And for about 2 hours, 2 hours and a half in the morning, I trade at the open, trade live with you guys, and then take all of your questions on your stocks, your options, and your long-term portfolios. So if you guys have questions on your stocks or your positions or just on options trading in general, or you just want my opinion on some things, that's the best place to ask me, because then I can use the charts, use the options chains, go over the fundamentals with you guys, and explain my point of view. And after that, if you guys can't be there, they are recorded, obviously, so you can watch them back. You also get access to our chat rooms. You can chat with me and our other members all throughout the day, ask our opinions and other things of that nature on different things. Additionally, you get access to our educational section, which is like 15 hours of me just talking about various trading strategies, technical analysis, fundamental analysis, right? My leap strategies, my call debit strategies, all my strategies, how to build trading accounts, how to build long-term portfolio accounts. So much educational content in there that I will never put on YouTube. That's where all my tutorials are. And last but not least, you guys get access to all of my charts. So whenever you guys see charts and my watch list, you see support, resistance areas on hundreds of companies and fundamental breakdowns as well on probably over 100 companies at this point. You just get to copy paste all my charts. If you guys don't want to do this on your own and just want to copy what I have, I mean, feel free. It takes 15, 20 seconds. You get to just click a couple buttons, copy paste all my charts, copy paste all my watch lists that I use for trading every day, and they just become yours. Just an added benefit of being a Discord member. If any of that interests you, as I said, the link to join us is down below in the video description. Hopefully I get to see a few more of you guys in there soon. We'll love to have you in there. And if not, I guess I'll see you right back here on the channel. That's it for me. Have a great rest of your evening. Take care and peace.